MPC announcement is concerned, I'd like to apologize. That is the feed that we are getting from the MPC, the Monetary Policy Committee, on the cutting of the interest rates. It seems the gremlins, Devin Murrigan, is creeping into the world of technology, and it was almost quite tricky to figure out what the announcement actually was, but we have now confirmed. There it is. Reserve Bank cutting interest rates by 25 basis points. What does it actually mean to someone like me and you, Devin?
Well, if you go ahead and look at what the Reserve Bank did since the January, Gareth, it's been 275 basis points this latest cut. Of course, if we establish that it indeed did take place, all indication tells us that it has, will give us 300 basis points. It basically means that, you know what, your home loan gets a bit more affordable, your vehicle loan gets a bit more affordable, all in the context of the fact that it's COVID-19 impact economically on you. So I suppose it's a welcome relief for many people indeed.
And I was speaking to Azar Jamin earlier, and one of the things he kept raising was that there is wiggle room. You know, there's been a lot of wiggling up to now. We've seen some of the lowest interest rates is, 15 years that our interest rates are so low at the moment as well. And he was suggesting that there is even more space if need be. I mean, how far down can we pull these interest rates before it becomes damaging?
That's right, because what happens is that, remember that the rand is also in need of good healed. What do we mean by that? Well, the rand really strengthens, Gareth, when you have healed that it chases compared to interest rates internationally. South Africa's healed or interest rate is quite high. And when that happens, you'll find that the rand tends to do actually well. But if interest rates get cut further and further back, you could run the risk of getting inflation actually returning to be higher. And the rand has the risk of actually weakening. So how much space we have, it depends on who you speak to. Some economists might say, no, we can't take the interest rate cut further and further because we might not have ammunition available to us by the end of the year.
And when you talk about ammunition, Devin, many people are saying it's great for now if you have a credit card, if you've got the home loan, as you're suggesting, perhaps there's car payments you need to look after, then you're able to at least save some money now. But I understand you have a guest, Devin, that's going to be able to unpack this for us, because where I was going with my question was, it's great for now, but there's no such thing as a free lunch.
Indeed. Yes. No, there isn't, because you all have to pay for that. I tell you what, let's just cross over to Sanisha Pakrasamy. She is an economist at Momentum. She joins us now to get more analysis on this. Sanisha, let me ask you this. I mean, obviously this was expected, 25 basis points cut in the interest rate. Do you think you could have saved the ammunition for later, or was this appropriate as far as timing is concerned?
Thanks, Devin, and thanks for having me on your show. We were going for a 25 basis point cut at this meeting, just as we see with the MPC members themselves having a divergence in preferences on today's interest rate decision. We also saw this being reflected in the market. So if we had a look at the Reuters consensus figures going into today's MPC meeting, 13 analysts were suggesting that interest rates be cut by 25 basis points. 13 preferred no change in interest rates, and there were 2 that were looking for a 50 basis point cut. And our rationale behind a 25 basis point cut instead of something larger like a 50 basis point cut was really essentially on being more data dependent and allowing the Reserve Bank some time to assess the new incoming data and whether, just to see whether the economy is in fact recovering from a more torrid second quarter of the year and how strong that recovery in fact is.
Now, before we had this decision take place today, many were debating the fact as to whether or not we are at the end of this cutting cycle. We've been given a lot of leeway as far as rates are concerned. I mean, that's a huge drop in interest rates since January this year. Do you think we are at the end of this cutting cycle, Sanisha?
So up until today, prior to this cut, we were probably one of the emerging markets that saw the greatest extent of interest rate cuts since the COVID-19 crisis. I think the only other country out there was Turkey at that stage. So we do know that the Reserve Bank have front-loaded a lot of their monetary policy decision-making and some of the other actions as well. Saying that, though, we still think that there is possibly space for one more interest rate cut, but I think the hurdle thereafter to cutting interest rates becomes quite high. We know that cutting interest rates is not really, the all-out panacea to save growth. quite a lot rests on having to do structural reform measures in the economy to really boost confidence and prop up economic growth.
You know, it's interesting that when you look at the projections for growth, for example, not a huge change, but they actually see GDP growth a little bit weaker or more contracting than the last time they met, 7.3% into the negative for this year. Job losses also not too much of a pretty picture there. I mean, I suppose you'll hear these forecasts from many people in many quarters, but when it does come from the Reserve Bank, it tends to be a little bit more, you have to take that a bit more seriously on the gloomy front.
Indeed. I mean, we know, again, the consensus number for growth this year is sitting at a contraction of 8%. So it appears as though the SARB is, migrating towards that figure. Again, even though we may see some sort of bounce in growth next year, as you point out, job losses are a major concern, as would be bankruptcy. So I think there will be some lingering scarring effects of COVID-19 on the South African economy.
Can the Reserve Bank do much more beyond just cutting interest rates? I mean, a lot of debate in the media and on different platforms about whether or not the Reserve Bank should continue on this bond buying exercise that we saw in the beginning of the year. But of course, that comes with a lot of warnings by the Reserve Bank governor himself. Where do you stand on that?
Well, Devin, I don't think anyone can say that the Reserve Bank sat on their hands early on in the COVID-19 crisis. They reacted quite sizably and quite strongly up front. And they've done a number of actions in the market, aside from cutting interest rates. As you say, they've also managed to buy government bonds in the secondary market. They have eased some of the regulations to allow for the commercial banks to lend more easily to firms as well as households. They also have an involvement in the loan and guarantee scheme. With regards to the bond buying program, they really were trying to alleviate the gap in the bid-ask spread within the fixed income market. And we saw that bond purchases slowed a bit in June, and I think this is rightly so, given that quite a lot of liquidity came back into the market, and what they had set out to do was partially resolved by them.
And then, of course, we lost signal from the Reserve Bank for a couple of minutes there, but I would think that, as he's done previously in many of these addresses, he said that at the core of it, adjusting interest rates is not going to boost this economy at all. He's a very big proponent of actually getting structural reform right, improving investor confidence, because that lies at the heart of improving this economy. Of course, again, it's a message that many people and many experts would throw about to government, but it seems to be a lot more easier said than done as far as improving confidence is concerned, isn't it?
I would fully agree with that statement, Devin. I mean, we know that in the case of South Africa, business confidence right now, according to the Bureau of Economic Research, is the lowest that it's been on record. Consumer confidence reached the lows that we saw back in 1985. So a lot more than just interest rates needs to change in our economy in order to spur up confidence levels again. There's quite a nice survey that the Bureau of Economic Research does in the manufacturing sector, where they ask manufacturers what's holding them back from investing. Only 26% of them say that it's the short-term interest rate being a constraint. But more than 80% of them say that there's just not enough demand in the system, and 83% of them say that it's due to policy uncertainty prevailing in the environment that's really holding back fixed investment. And when we think about policy uncertainty, we think about the structural reform measures that need to be implemented at a more faster pace in South Africa to really generate high levels of confidence and ultimately move us to a higher growth path.
All right, we're going to have to leave it there. Thanks very much indeed. Sanisha Pakrasamy is an economist at Momentum. And just to recap there, Gareth, 25 basis points cut. It means that the Reserve Bank has helped consumers with a 300 basis points cut since January this year. So some relief amongst all the COVID-19 pandemic. But again, it helps those consumers that are owning the vehicle, that's owning the property. When it comes to the poorest of South Africans, we really have to wait for this sort of loosening to trickle down to them, if you know what I'm saying.
There's almost three scenarios. The two you've mentioned, those that have and are fortunate enough to have home loans and cars, those are the poorest of the poor. But then there's those that have taken a massive knock as a result of COVID-19 directly and have lost their jobs. And right now, the bit of leeway they had before with their finances is taken away. But this could go some way, Devin, thank you, to at least push you through the month, I think is the case for many, many people. Devin Morrigan, thank you very much indeed.